Welcome everyone to Risk. Today I have a great guest today, Mr. Robert Kientz from Gold Silver Pros. Welcome, Robert.
How you doing, buddy? Good to be back. Good to see you on.
Good to see you as well. Why don't you tell the audience who you are and what you do and your background?
Boy, man, we could take 30 minutes just on that. I had this weird background where I didn't want to go to college. Basically, my high school counselor and my mom forced me to because I was an honor student, which meant, of course, I had to go to college. It's like I wanted to start business. So I went to college, got a bunch of college degrees in technology, IT, and cybersecurity and stuff. Was an auditor, for about 12 of those 25 years. I did IT stuff. I did consulting. I was right there in the middle of the mortgage crisis. I was doing a special consulting project for Morgan Stanley where we were trying to basically save all these defaulting ARM loans, adjustable rate mortgages. So I saw the mortgage mess right in the middle of it. It was a complete and utter disaster. We got it saved, but goodness, man, we had 50 people working on that bad boy.
You were living through The Big Short yourself, right?
Yeah, exactly. And then, I went on to, I got laid off from EY right after that engagement. I made the company like $7 million. I'm like, why the hell are you laying me off? And they said, we don't have a choice. We're just cutting headcount. And I wrote the book Drop Shadow. Then I started writing, got syndicated. Then I started Gold Silver Pros. I found Austrian economics to me, which made a lot more sense. And I just started writing and it just kind of took off from there. And then people are like, hey, dude, you got to do a YouTube channel. So I did that. And here we are.
So you recently got involved with auditing the Perth Mint. Tell us a little bit about what happened, how you got into that, what you found.
So over the last year or so, there's been a lot of online talk and scuttlebutt about, do these gold and silver companies actually have the metal? And we're talking about companies like Perth or Kitco or any of them, not picking out any names specifically. Anybody that stores metal, usually they're stored at Brinks and one of these other big depositories, but the companies you deal with are intermediaries and they market it as a product. Well, there were a lot of people saying, man, I can't get my metal. I'm trying to get my metal out. I can't get my metal, anecdotally, but all over the place. And they started increasing in frequency. So John Adams, got to credit him. He had several people that wrote to him and said, I've got metal in Perth Mint. They won't give it to me. They want to give me cash or they want to delay. And so he started posting that on Twitter and stuff. Well, we all started in the precious metal community. We all started following it, right? And then I have a follower named Daniel Vigario, who is a CFA, certified financial analyst, who lives in the UK. Originally got it from South Africa, but lives and works in the UK as a director of a company. A lot of experience, all the credentials you'd want. Said, he told me, Rob, the way that you're going to find this is in the published financial statements. Well, not all the gold companies are public, but Perth Mint happens to be one. It's actually owned by the government, or it's run by the government, but it's run as a commercial enterprise, backed by the government of Australia, right? So he starts looking at their financials, and he sends me an email, like, Rob, you got to see this. Anyway, long story short, what he did was he took their published financial statements and rebuilt a trial balance sheet. Now, for those of you that aren't accountants, a balance sheet in accounting is you got credit and debit and they got to equal, right? So you debit one side, you got to credit the other. And that's how it's double entry accounting. It's how you make sure the books are legit, right? So he went through it and built that from all of their published financials and said they don't have all the metal. And again, long story short, that we've got 4 videos up on our channel where we actually have the spreadsheet and we're going line by line. So anybody wants to view it, and I publish a spreadsheet for anybody who wants to look at it. All there. We go through and it turns out this is the scam. They took customers' money. They said it's your metal. In the fine print, it was like, well, we may do some refining of the metal, but it's all there. They were net short of the physical metal by almost $1 billion Australian. Almost $1 billion. And not only that, what we found out they were doing is they're using funds coming in from the ETF, basically to fund their customer accounts. But then they had sold that metal to a third party and it got really deeper. Okay, that metal went to a third party that, according to their CEO in an interview with Kitco, said it is an S&P rated counterparty, which means it could only been one of the exchanges or the big bullion banks or the big players on the market. So in other words, they used that metal to bail somebody out sometime, Lee, when there was this big run on metals, but we don't know who it is. But they got made whole in March of this year. They got made whole. They got paid back most of it. Now they're still net short of metal, but they're now a solvent entity because they sold the ETF to Goldman Sachs, and the ETF, the exchange traded fund. Goldman Sachs, as soon as they bought it, said you can now not redeem your shares for metal. Meaning that ETF probably still doesn't have the metal. And since you can't redeem it for metal, you're never going to figure it out. You're never going to know because they don't publish audit reports on that anymore. It went off to Goldman Sachs. So now you got the ETF going to Goldman Sachs. You can't redeem it for metal. We don't think the metal's there, but we can't prove it. We know they're still net short of metal, but they're trying to amend their position. And I think it's because we put the spotlight on them. We did videos. The CEO did a rebuttal on Kitco. We went back and said, no, we think you're not telling the truth, either purposefully or you just don't understand. And we basically proved they're running a fractional reserve metal scheme. Now, the big lesson in all of this is, if you're going to buy metal and store it with somebody else, you better darn well know that they have it. It needs to be fully allocated, fully audited, and there needs to be enough transparency that you can take it to your accountant and he can bless it and say, yeah, I think they have it. And if you can't do that, man, don't store your metal with other people.
So it's a risky proposition to do so. On Wall Street Silver, we always said if you don't have it in your hands, you don't own it.
You know, that's a good rule of thumb. And I used to say you can secure it storely outside your house. I still think there are ways to do it, but like on me, I have a private deal because I used to do real estate. And I know people that store valuable items in these really secure centers that don't advertise for wealthy individuals. Mm-hmm. That's where I've got my metal. But I can walk in, it's within driving distance from my house. I can walk in, audit, and I do several times a year. And I've got my own cage with my own lock on it. So I know it's there. But see, if you're doing it with these overseas entities or it's not in your state and you're just trusting them, you've got to be careful with that, because so many of these schemes are starting to come out where they're not, the metal's not there, and they're thinking that you're never going to notice. And, you know, and this is an issue because if the stuff ever hits the fan in the financial markets, which we think it will eventually, then, and you don't have your metal, what's your insurance against, you know, that stock market collapse or the big deflationary issues that we're going to have?
Do you think that'll ever happen where you go and you knock on the door and say, where's my metal? And you're not going to get it?
100%. I think it's going to happen, you know, because we've seen people phoning in to Kitco and complaining anecdotally. And we've seen people phoning into Perth Mint. And I've seen people tell me that I've used this company or that company. There are other companies I can't mention yet because the data's not out, but there are other companies that I'm working with different people around the industry right now. And we suspect that they don't have it all because customer complaints. Now we're keeping it quiet for now because we need to do validation. What we don't want to do is say something about a company which ends up not being true. We got to do our due diligence. But at the end of the day, there's more to come. Trust me on this. There's more to come. And it's going to shock people. We're talking about some of the biggest players in the space. And, you know, it's scary stuff.
What impact do you think that has had on the price of precious metals?
Well, what it does, Lee, is it creates artificial supply. Yeah. Much like we talk on our show all the time, the COMEX derivative market is a bunch of paper, gold, and silver. Wall Street Silver talked about that all the time. You know, You're going to talk about it on your channel. All this paper crap, whether it's gold, silver market or oil or whatever it is, it creates artificial supply, right? And it distorts the price mechanism, because the only way that you're going to know what the real price is in that physical trading of that commodity, because commodity's value is in its physical presence. You can use it for something. But what happens when you get into these unallocated pooled accounts, or it says segregated allocated and it's not, and they don't actually have it and they've lied, it means you're buying paper or you're buying a promise. And what that does is it suppresses gold and silver prices, because it says that we actually have more physical gold and silver than we do. The big question I have right now, how much of the gold and silver in the world actually exists? And how many times has that same gold and silver been sold 5 times, 10 times, 15 times to an unsuspecting public that's not aware that this is going on?
Yeah. I mean, this is really an old game. This goes back hundreds of years. We've been doing this. It's not like a brand new thing.
Yet the very early fractional reserve systems weren't fiat paper dollar fractional reserve systems. They were gold fractional reserve, where what you'd have is the kings, the royalty, and everybody else needed a place to store the gold. The people needed a place to store the gold. So they'd storm at these old gold dealers. And those gold dealers realized people just left it there forever, right? They didn't come for it. It was savings. So they would start to give out paper receipts on that, and they'd write more paper receipts than the gold that they had. And that was fractional reserve gold. So yeah, this is, you know, dating back to medieval times. These are same scams that were run back then.
You know, there's nothing new under the sun, as they say, right?
I don't think so.
Tell me, do you think this has more of an impact on the actual price than the whole COMEX phenomena?
Well, I think COMEX has more of an impact on the price because it actually sets the spot price in the market. And people say it's the combination of the London over-the-counter market, which is another derivative market out of London, and then the one we have here in the States. But really, I think the US determines it, because if you look at the daily trading and where that trading closes, it's usually within a few cents of the actual spot price. So essentially, that's what determines the price. I do, however, think, Lee, that what it doesn't as much suppress the price. Well, it does suppress the price, but what it more does is it gives a false signal we have more than we have. I think there's more shortages of gold and silver, especially because it's used as a commodity so much. it's actually used up in so many, millions of applications, that there's actually less above ground than people think. And these systems allow people to invest in what they think is physical, and it's not. And it'd be like you calling up Perth or calling up your local broker and they say, we don't have gold and silver right now. They never want to say that because they don't want you to know that supplies are short. Where they can tell you, oh yeah, we've got it, no problem. Just send me your wire and I'll take care, and it'll be over here and you don't have to worry about it. We got it covered for you. It creates a perception that we don't have shortages. And if people realize how much shortages we actually had, the prices, then yes, the prices would spike up.
What do you think's going on in the world right now with the monetary systems and
Yeah,
all the craziness with Evergrande, and what kind of impact is that going to have?
I think it almost collapsed in 2008, 2009 with the Lehman crisis, but they papered it over and printed untold amounts of money. During the pandemic last year, 40% of the M1 money supply in the US dollar was created in 1 year. What we're seeing now, Lee, is that's now dumped on the system, and it's caused massive inflation. It started with commodities prices, then it went to producer prices, and now it's in consumer prices. We're doing segment after segment. I just recorded one 10 minutes before this video where I was at a store not too far from me. It's Outdoor World, and I'll preview it here. They have no high-end items. They have a massive boating center that used to have 100 boats. It has 0 boats in it. Oh. So what we're seeing is massive supply chain shortages. I did a video on Walmart and how they're walling off. My local Walmart in Grapevine, Texas. Okay, they're walling off a third of that Walmart. They have no goods. So they're putting a wall there to pretend it doesn't exist. Well, I got it before they finished the third wall. And I showed, this used to be the automotive sector. This used to be the toy center. The signs were still up. I've been shopping that for 10 years. So I knew what they were doing. There are massive supply chain shortages. There's a ton of inflation. And what's happening is there's too much currency in the system. And it's not just the dollar. Like, that's the thing. For 10 years, I was writing articles on Seeking Alpha, which is a major financial publication. It's syndicated everywhere, 20 million viewers of that magazine. And I was writing articles saying the Chinese are printing more dollars than the US is, and Europe is just behind the US. So it's not just the dollar, it's everywhere. There's inflation everywhere. Chinese PPI, the producer price index for last month, was 13.5%. You know what's going to happen to the Chinese people when they go to the store to buy their fruits and vegetables and to buy their clothes next month? 13.5% inflation. It gets transmitted from the producers to the people who buy it, or else the producers go out of business. So what you're going to see is rampant inflation everywhere. So that's the money supply. As regards to the debt, at the same time, this is like the twin evils, right? At the same time, you're having massive debt issues because Evergrande basically defaulted, but they got bailed out. What China did was they told their state-owned entities, these are collusions between the government and their corporate sector, they told the state-owned entities to bail out Evergrande. Evergrande had to make 148 million bond coupon payment. They said they couldn't make it. Literally at the 11th hour and 59th minute, they made it. And that money could not have come from Evergrande. They were insolvent. It came from other entities in China. The reason China wanted their state-owned entities to do it, they didn't want to officially announce a central bank or the government was going to do it, because it would cause what? A run on the yuan. It would have caused panic in the yuan. If Evergrande defaults, this is the statistic everybody that's listening to this show needs to understand. Evergrande represents a $62 trillion market. That's the Chinese property development market, 62 trillion. It is the largest single asset class in the world. It dwarfs the US stock market, the US bond market, and the US real estate market. They're all around 30 to 35 trillion. The largest asset class in the world. And we've now had 5 companies go defunct: Evergrande, Cynic, Kaisa, and 2 others I can't even think of right now, but there are 5. So that whole debt system in China is under pressure. And because everything is worldwide and everybody invests in everybody, if China's debt market goes down, the US's debt market goes down, Europe goes down, it's a cascade. And so what the Chinese are trying to do is stave off not only major debt issues in their economy, which would collapse their economy eventually, but also around the world. This is a worldwide phenomenon, and it's very dangerous. And this could be that proverbial black swan that nobody saw coming.
I think some of us.
Yeah, some of us saw it coming, but I don't know. Did you see it coming out of the Chinese property market? I'm not sure a lot of us did. I thought a lot of us thought it was going to be Deutsche Bank or something like that.
I think there's just been a global real estate bubble.
True.
I look very closely at the New York City market, and I'm just astounded that these REITs that own all these commercial buildings in Manhattan just have not completely collapsed, because and this is long before COVID.
Mm-hmm.
there are a lot of corporations that are renting space. They've been downsizing, and then all the retail places, I mean, they've just shut down, and they're still asking these outrageous rents, but there's no demand for them. So you just have to wonder, like, how are these corporations just continuing to press on and survive?
So, Lee, from your perspective, I mean, your show is risk, right? What is the risk if that thing collapses? What happens? Is it Lehman or is it bigger?
I think it's going to be much bigger, because
Yeah, I do too.
the world has been getting crazier and crazier every decade. I mean, I really started paying attention to the economic market back, like, around long-term capital management, and
Yeah.
just been one bubble after another. The risk has been growing exponentially. We're definitely seeing it here. COVID just accelerated things. I think it's becoming a lot more real this time for people, just as you mentioned with Walmart and the supply chain issues, because it's just a snowball effect that's going on right now. I bought some shampoo this weekend, Robert, and I normally get those big bottles of Pantene at the discount store, like
Right.
days or whatever it is. And my old bottle, I think, was 38.9 ounces or 40, and it was like 10 ounces less. It was like this pudgy little container for the same price. And
Yeah.
I always thought that was ridiculous.
Shrinkflation, right? They don't raise the price, they just make it smaller and hope that you won't notice.
And I mean, years ago, I remember buying what I thought was a half gallon of ice cream, and I looked at the ounces. I'm like, this isn't a half gallon. Why do they call it a half gallon? So
that happens all the time. Breyer's brand. I don't mean to single out a brand because they all do it. Breyer's brand advertises what is a half gallon, but now they're not saying half gallon. It's really about maybe 2/3 of that. But it's got the same size and shape of the original container. And now they're not labeling it half gallon anymore. It's like it's hard to find even a half gallon of ice cream anymore, because if you bought an actual half gallon of ice cream, it may be twice what you paid 2 years ago.
Yeah, I don't think they're making half gallons anymore. Soon it'll be a pint.
It's the pint, and it's like that size in between. It's like a pint and a half, but they make it boxy shaping like the half gallon, but it's a lot smaller.
Exactly.
Yeah.
I mean, I know they did that with cereal years ago, back in the 80s and 70s. I mean, shrinkflation's been going on a long time.
Yeah.
But at the end of the day, I mean, it's very obvious when it comes to certain things, like that shampoo. I mean, cereal box, you kind of get away with it. Ice cream, you kind of get away with it. But then all of a sudden you buy this thing and it's like, it just doesn't look the same. It's like pudgy. Like, what happened?
think Sally Homemaker has figured out that there's inflation. So she may not be the genius watching. I mean, she's busy with her kids and doing the house, and she may not watch all the financial channels, right, and dive down deep into this, but she's figured it out. And so if their husbands, because the husbands, want to go have a beer, and beers aren't $2 or $3 anymore. They're $10, for a beer at your local bar. So everybody's starting to notice it because it's showing up so much in prices that you can't do the same things you used to be able to do. It's crazy. And sales of high-end items are falling, because the middle class, which used to aspire to that high-end lifestyle, so they'd want to buy a boat or an expensive vacation or a Lexus. Now they're downsizing, man. Maybe they're not buying that boat. Maybe they're doing a staycation. Maybe they're going closer, here in Texas, maybe you're going to Galveston instead of, going down to Mexico or whatever, or Dominican Republic, whatever the case may be. But yeah, everybody's downsizing their dreams and downsizing their purchases. And you see it. You can see it in retail. You can see how they're just collapsing their show space and pretending that you don't notice, or that you're not going to notice. But the thing is, if you've lived in an area and gone to the same place for 10 years, of course you notice.
No doubt. Yep. I mean, you also notice at the gas pump every day you fill up.
We're in the cheap end because we're in Texas, and we're in that refining area where we're going to get refined cheapest because they don't have to ship it over long areas, like over a pipeline or a truck. So I got gas locally for about $3.09. But man, I'm hearing in California they're paying $6 a gallon. That's higher than it was, the last time we had this gas issue. What was it, 7-8 years ago?
It's California is always the world unto itself, and they do things to extremes out there on many levels.
They do. A lot of it's taxes, but still, I mean, just it's crazy.
Where do you see this going? I mean, do you have any timeframes for everything kind of falling apart, if you will?
I've learned not to do timeframes because a lot of research I have done dating back 3,000 years of financial history. So I'm talking super long-term stuff, shows that you can't date things exactly. It happens in time ranges. And I could give you some. For example, Kondratiev, which was a famous political economist in Russia.
The waves.
Kondratiev waves and the whole seasonal thing over every 80 years. He did that research on behalf of the Russian royalty family. And they said, why do we have recessions? And he did this research, and there's 80-year cycles. But if you take 3 of the 80-year cycles, it gives you a 240, 250-year cycle. Well, guess what that is, Lee? Sir John Glove did research for the Crown in England and found out that every 250 years, you have one dominant nation state fall and another one rise. 240, 260 years. Well, guess how long it's been since the US did their Declaration of Independence and the Revolutionary War? 241 years at this point. So we're sitting in that time frame where the US is going to start to not be the dominant superpower anymore, and the next one's going to rise. We all think it's going to be China, but that's what's happening. And then you date back 3,000 years and you realize this is a pattern that is repeated over every major nation state. In Rome, it happened in 2 stages, but basically it happened there as well. But it happened in Britain, the Great Spanish, the ancient Assyrians. I mean, all of these great cultures. But the thing that Sir John Glove did that nobody else did was he did milestones. He's like, the exact year count doesn't matter. It's the milestone. And when you hit these social and political and economic milestones, you know where you are. And as I've done for our subscribers on the website and our supporters on Patreon, I actually mapped it out to the US. And I said, we hit this milestone, we hit this milestone, we hit this milestone, and this is the last one left. So we're pretty close to hitting that last milestone. It means that our markets are going to devalue, they're going to collapse. A lot of stuff's going to happen where the US infrastructure that they built is going to collapse. A military industrial complex is going to collapse. It can't support its own weight, just like it did in Rome, just like it did in Britain, the Great Britain Navy, and it collapsed. And a lot of their colonies became free, right? Because Britain couldn't manage them anymore. Same thing, with all these cultures. So that's a long way of saying that we're pretty close to the end. We're at the 11th hour for our nation state, and with their 11th and a half hour for this 80-year Kondratiev cycle where we're going through this winter period. Now, could this go on for a few more years? Sure, maybe even 5 to 10, but we're at the end of it. And so the good news is we're telling you this so you have time to make your preparations financially and otherwise, but it's not going to be that long. It's going to happen during this generation. We're going to see it. So that's what matters. And the exact date doesn't matter. It just matters that you understand that it's coming, how this has occurred over time, not only in the US, but across all major cultures and societies, and that it's going to happen again. It's just normal, cyclical birth and rebirth of systems. And that's what we're about to go through. And so that's what you need to pay attention to.
I was thinking today on comparison between China and Russia. If you go back in our history, the federal government, the state governments, they were more focused on actual real infrastructure and supporting the economy.
Yes.
You look in my own home state of New York, we had the barge canal. That was a tremendous boost to the infrastructure of New York State and really the whole country. It really kind of built the whole country, bringing goods in from Canada and in from Europe up to Canada and back and forth. And this is built at a time when there were just horse and buggies and gravel roads. There was no pavement or anything like that. Now we see a similar thing being done out in China with the Belt Road Initiative. Do you think that's going to have as big an impact as the barge canal did on?
Well, exponentially bigger, because the Belt and Road Initiative is the largest infrastructure project ever taken by man in the history of the world, especially by one nation. So they're connecting 73% of worldwide GDP together. It's not just the BRIC nations. I mean, they're connecting Europe. Russia is building a leg of this in the Arctic above them. They're building, not only are they building rail routes and roads, they're building shipping routes, renewed shipping routes. They've got deals with almost every country except for a few holdout Western nations. People like Australia, Japan, the US, Canada. Everybody else is in on this thing. So it's literally the world connecting the world together. The key thing is, Lee, they're doing it in Chinese denominated contracts and Chinese denominated loans. So that is going to propel that Chinese currency, and China is getting a cut of all this. So they're generating immense wealth, immense access to commodities that they need. Talk about shortages. Chinese know that there are going to be shortages. If they're doing all these deals to connect the world together, it's not only the financial aspect of, hey, let's do deals with the rest of the world and build this big infrastructure. It's like you said, it's to get goods to them so that they'll have the goods that they need to raise their middle class. That's their stated goal. They want to raise their middle class. They want 500 million middle class people. They don't have it right now. Something like 40 or 50 million. They want to multiply it by 10. They want to be the next great superpower. And that's what the Belt and Road Initiative, if successful, will allow them to do. It's huge.
Do you think the real estate market and in the country there, it puts all this in jeopardy?
In the short term, what will happen is China's going to rise as the next global power. I don't think that that's not going to happen. There's too much going their way. They've been too smart about it. They're long-term planners, but they're going to have hiccups along the way. No great empire was built without problems and without crises. The China is about to go through a debt-based crises that the rest of the world's going to go through, but they're going to emerge on the other side in much better shape. So will Russia. Much better shape in the US because of all these infrastructure projects. The fact that they can back their currencies as gold, they have more gold than the US does, because without getting in that whole discussion, China's taken all of their domestic production for years, probably a decade, and they've held it internally. They just don't report it, but we know they're doing it because that's what every market analyst says. Gold does not come out of China. China's been hoarding resources around the world. They've been buying US farmland. They've been buying US rare earth mines. They've been buying stuff in Australia. They've been cutting deals with the Middle East for fuel. I'm telling you, they're going to be better prepared. So we're all going to go through the crisis, okay? And there's going to be a liquidation of all the bad malinvestment around the world. But that's going to be the Western-based stuff that everybody's exposed to. But these countries like China that are preparing now are going to come out of that as the leaders. That's what matters. It doesn't matter that you face a crisis. It matters how you come out on the other side. And China knows it's going through the crisis. It was a participant in the US debt system, right? They needed the debt so that they could push out all their manufacturing, push out all their goods. But they are going to come out on the other side much better than the Western nations are.
So, I mean, we basically had a shift here from a manufacturing economy into more of a financial economy. And it sounds like China may be undergoing that same process.
They are, because they adopted a lot of the capitalist system and the Western system. If you think about it, a lot of companies went over there and they took their technology and their processes and built it upon that. And China knew it had to get away from communism and use some sort of semi-capitalist system. Now, it's not pure capitalism because, like I said, they have state-owned entities. The military has offices in Huawei, the big telecom, and there's a lot of collusive behavior between the government and the enterprise. But it's a more capitalist than it ever was. And they needed to do that to grow and rise as a superpower. And they also needed to take on a lot of debt and print a long currency. And again, they know that they're very financialized, but they have a higher percentage internal growth than the US has had in forever. And so are they going to suffer financially? Sure. But it's okay. Think about it this way. Yeah, stuff's going to crash. But what's going to happen is they're going to rebuild quicker, faster, stronger. And they have reserves and they have access to goods that their people are going to need much, much more than the US does. Look at what happens when we restarted the economies from a pandemic, and now we can't get stuff through our ports because we're not running 24/7 ports like the rest of the world. The US infrastructurally is ill-equipped to go through a financial catastrophe. That is not true in China, and that's not true in Russia. They are very well equipped. And a lot of their partners, so one of the reasons they're getting on the Belt and Road Initiative is they know the same thing is coming. You got people in the Middle East, you got people in Europe begging to get in this. The British are helping to finance a lot of this, to put their money towards it, because they know that China is going to be the source in this new cycle for goods and services, and probably even financial support and military support. So yeah, we're all going to go through this mess. And China is financialized, but not to the extreme that the Western countries are, not especially the United States.
You know, Robert, with all this in mind, how do you think your average person here can prepare for the shift that we're about to go through and exploit it and maybe come out ahead?
So I run Gold, Silver, Pros, and I always say get your physical precious metals as much as you can, but don't overextend yourself into it. Get enough that you think that it's going to help you survive the massive inflation and also some sort of deflationary collapse. The second thing is pay off as much debt as you can. The third thing is save as much as you can. Have real, not just gold and silver, but real cash on hand, because when the crisis first starts, the first thing people will turn to is the state currency. So they're going to turn to the buck, the dollar bill, the greenback, right? That's what they're going to go for first. So have that. So when prices rise, you can afford it, get rid of that stuff, and then have your gold and silver a little bit more long-term. The other thing is downsize your lifestyle if you can. I know a lot of people want to hear that, but get out of these big, expensive, big mansions and go to something a little bit more affordable, become a little bit more independent, grow a victory garden. No, I'm not kidding. If food gets really expensive, if you have your own garden, it's going to help. You have your own fruit trees, your own chickens, it's going to help. The biggest thing also is networking with people. Know people that can help you out. Know people that can provide you the stuff that you need, because we may temporarily go to like a barter economy where we're just like, you know what, I can fix your car, you can fix my plumbing. You know, I'll give you some chicken eggs, you can give me some bread, whatever the case may be. Do what you can there. Think about Depression era America. What did they do? My parents, or my mom, grew up on a farm. They survived because they grew up on a farm and they could trade food for everything else they needed. Now, they were never rich, but they survived. What about all the people that live in cities now and they live in apartments or in places where you have no self-sustainability, no independence? Then you're in trouble. So that's what you got to think about. Don't just financially prepare in every way that you can so that you're less likely to be affected by it. We're all going to be affected by it, but you want to reduce the effects as much as possible. And what I say to people is, I'm a former risk guy. So apropos to your show name, do risk management, put it on a spreadsheet and say, you know what, I see this risk, this risk, this risk, this risk. Step 1, step 2, step 3 for this, step 1, step 2, step 3 for this. Do a little Gantt chart or a schedule chart and say, I've got this much time to do this much time to do this. This is what it's going to cost. And be intelligent about it and address your risk that way. This is what major corporations do. This is what people need to do. Sure. You need to put it down on paper and say, what are my risks and how am I going to deal with it? Take a risk approach.
No, it makes perfect sense to me.
Mm-hmm.
Do you see anything in the next year or so? I know you don't do timeframes, but do you see any kind of things that aren't being really reported in the mainstream press that you think could come and bite us?
It's going to get worse before it gets better. One of the things I put out in a video on Sunday, and I'm going to talk about again on premiere on our channel tonight, is supply chain shortages don't just have to do with ships and ports. It has to do with exploration, mining and harvesting, and refining. And those are severely undeveloped in the US, and not enough money is going into exploration, mining, and harvesting. So our next batch of goods, not only for the US, but for the rest of the world, is not there. We're not just talking gold and silver. We're talking base metals, wood, everything, minerals, everything that you need. The average American uses hundreds of minerals every day, just waking up, going to the office, drinking coffee, having lunch, driving a car home, or getting on the train home. Hundreds of minerals, and we're short of all of them because the capacity has not been developed. So it's not just going to be that we have a financial issue. We have a raw product issue where you're not able to get what you need to survive, to support the current world's population, especially as you have the Chinese wanting to rise to middle class. That's the next big stage of this that nobody sees coming. Nobody's talking about that. They're talking about the ports. They're not talking about the raw goods you need to stock the ports. So everybody thinks once we get all those container ships offloaded off of LA, the West Coast, oh, we're all good. Everything returns to normal. It does not return to normal because people have been buying Apple stock until it's overvalued by a factor of about 50, right? And Tesla and all that other garbage. We're not investing in the stuff we need to build the iPhones and all this other stuff. These iPhones are about to get scarcely because we don't have the silver, the plastics, all of this stuff needed to build these. In the next 5 to 10 years.
Or is it a global issue?
It's a global issue because the mines have not been invested in. People are investing in momentum stocks and through passive investing, and they're not investing in real things. Okay. And that's the problem. There was a Kiplinger study that came out that said the millennials are the smartest investment class in the world because they do more research. Okay. They research, but the problem with the millennials, they take no risk. And Kiplinger said, if you don't take a risk, you're in trouble. Yes, exploration, harvesting, mining's risky, but you have to do it. And if you don't do it, you're in trouble. And I talked to a couple of millennials. One was a company CEO, and he said, all of my friends want to invest in Apple because they have their own team of geologists. The problem is Apple can't manage the mines. They can't manage all the production of the raw goods that they need. They have geologists there to try to identify supply chain issues, but they can't manage it. Right. We've got to invest at the very left of the cycle. You know, what we used to invest in that made us a proud and strong nation. Our own mining and refining processes, bringing those jobs back. We have to do it or we'll have no independence.
Well, you mentioned a couple times throughout this discussion that China's kind of trying to bring up their middle class. And it seems like DC is doing the exact opposite to our middle class.
Globalization and pushing out all of our capacity to support ourselves is going to hurt the worst.
Yeah.
I mean, it's going to be bigger than finance. It's going to be, do we have the stuff we need to survive and maintain our current lifestyle? And I'm saying not right now. So from an investment perspective, the good news, you go invest in all that stuff and you probably get rich afterwards, you know? But, you know, just from an everyday life perspective, boy, we got to start paying attention to these problems because we don't, it's going to be too late.
When you say invest in that stuff, are you talking about mining companies of raw materials?
Mining, harvesting, raw materials, taking those goods to a usable form that people like Apple can turn into iPhones. Those first couple of steps of the process where we get stuff from the ground, whether it's harvesting or mining, and then we refine it. Those two stages are the most underfunded stages across the world. And that's what China's doing. It's investing all this money to build it up because it knows. Chinese are smart, I'm telling you. They know what's coming. The US has declined to participate in the Belt and Road. We've isolated ourselves along with Canada, Japan, and Australia. And this time we're wrong. This time we're wrong and those guys are right.
Yeah, I think investing in infrastructure, true infrastructure, is
Yes.
always a good thing for our country. How do you compare what the Chinese are doing to our new infrastructure bill that seems like fast to be signed, right?
Of the trillions going to that new infrastructure bill, only about 500 billion is for infrastructure. And even that some is loosely defined infrastructure where I could look at it and say, that's not really needed. I mean, the factories, the roads, and the bridges, the reason it's not in there is because all that stuff's been legislated out. We can't allow lead smelters in the US anymore, so we have to import all our lead because it's not environmentally friendly. You know, there's all these things that we can't do anymore because of all this legislation, this ESG legislation. So they, you know, they call it an infrastructure bill, but they can't really build all the infrastructure because all the existing laws won't allow for it. So how are you going to pass a budget to do something that's illegal? You have to address it in the legal system first. You know, and I'm afraid what's going to happen is you're going to have the crash first, and then they're going to realize it, and then they're going to go back and say, let's redo our law system. But by then, it's going to be felt by people. But Lee, it's really hard to undo 40 years of legislation that's basically put you in a box and says you can't be self-sufficient.
Are you of the opinion that that was done strategically on purpose?
You could say that there are people that did it because they may have had an interest in building up other economies around the world. Sure. I would say the global bankers, you know, are a class that is not, they don't care about nation states. They care about money. So maybe they were investing in other areas because they saw it as being more profitable. Yeah, I mean, you could say that some of that could be by design. I think a lot of it's just stupidity. And I think it's happened throughout every major nation state in history, going back to Sir John Glubb's research. So yeah, some of it's probably by design by players that would make money from the shift, but a lot of it's just abject stupidity. Honestly, it's either stupidity or ignorance about the fact that this happens every 250 years, like clockwork throughout history to every major civilization.
So based on the things you've studied in history, how do you see the United States progressing? I mean, do you think that there's any hope for us kind of getting back to our foundation where we were really growing? And
yes, one of the interesting parts of the research, particularly Sir John Glubb, was that when the big crash happened, people went back. I'm talking religiously, to their religious roots, to their cultural roots, to their values and their mores, and to building more sustainability. So yes, they do go back, but you always have to have the crash first. The crash has to come to teach the lesson. If you look at the 80-year cycle, you go through spring, summer, fall, winter. The winter is the crash. The spring is, oh, we screwed up. Let's go fix it. Well, now this is the third one of these. So we've gotten so bad that we need the big crash to wake us up and say, oh, now we remember the lessons of our forefathers. Okay, now let's go fix it. And yes, we will. We'll fix it. It's just going to be a painful period. And the way it will emerge is the United States will not be the dominant superpower anymore. It'll be a multi-power polar world. And the US will be a player, but they're not going to be the dominant one. They're not going to have the dominant military. They're not going to have the dominant anything anymore. We're going to be playing ball against other teams that are just as good as us. We're no longer the New York Yankees. We're just a team that's fighting the other New York Yankees and Boston Red Sox of the world for supremacy. It's going to be more of an even playing field. And that means we're going to have to work our butts off even harder.
No doubt about that. Is there anything you want to talk about, Robert?
Man, I think we've covered so much stuff, Lee.
Yeah.
I would just say, you know, listen to your channel, listen to other people's channel that talk about this stuff. Don't get discouraged by the fact that all of your neighbors don't understand this. Most people don't understand until the bad stuff happens. You're listening to this, which is the first step. You're open your mind to it. Your antenna's up. You're willing to receive. Now the question is, will you internalize it and actually do something about it and help your family? I hope that you will, and I hope that people listen to this and take it to heart, you know, and do what they can and try to help their neighbors and their family and their friends as much as possible.
Boy, you just said a mouthful there, Robert. I completely agree with you. Well, thank you so much for joining us here on Risk.
Absolutely.
Robert, thank you for the time. Appreciate you joining us, and we shall see you soon.
Man, I'm excited to be on your channel. Hope to have you on ours someday, Lee.